Howdy, welcome back to Dion Talk. In this video, I'm going to try to use a strategy that I got from my dad. When I was a kid, he always talked about taking a millionaire, a blue-collar worker, and a homeless person, and taking away everything that they have, and then watching them over the next 5 years. And he always said that in 5 years, you would have a millionaire, a blue-collar worker, and a homeless person. But I don't want you to be the homeless person or the blue-collar worker. So what I have today is a friend named Josh Bennett, who's going to come on here. He's an investor, been investing for about a decade, that has reached financial freedom by investing in rental properties. And I want him to tell us a little bit of his story and then share with us, if everything was taken away in 2021 or 2022, what's happening with the housing market is kind of crazy. But with his knowledge base, what would he do? Because I think within 5 years, he would be back to being financially free like he is now. So Josh, if you could just take a few minutes, tell me a little bit about what got you into real estate, where your portfolio is at now, and then we'll talk about what you would do if everything was taken away.
Sure. Thank you. I was introduced to the idea of investing in real estate when I was in college. I had a teacher who actually gave me a book project that was by Robert Kiyosaki, the book Rich Dad, Poor Dad. In doing that book project, I just instantly knew that that's what I was going to do. The whole thought process that I'd had before of business and such, I realized that real estate was what I was able to do. It was a way that I could get my financial freedom and really be able to control my time eventually. And that was how I was introduced to it. It was several years before I actually dove in. I moved from Michigan down to the Chattanooga, Tennessee area for the housing market. I did that at the worst time possible because I moved, I think, within 1 week or so of the real estate market crash. In coming here, everything changed all of a sudden. And so it took me about a year before I was able to do my first deal. Where I'm at now, from that time till now, is my portfolio is made up primarily of single family homes and multi-units, duplexes. And so I have 13 duplexes and one small commercial property, and the rest are single family homes. That's where I've come from since that time.
And how many units is that total?
That's a total of 48 units.
Okay, that's impressive. What I think is really cool is having your mind opened by a college professor, because I have a friend who's a college professor that has some rentals, and at his university, he's not allowed to talk about rental properties because the mentality is that it is economic violence to have more properties than the one you're going to live in. So he has to be really careful with how he talks about finances outside of going to school, racking up a bunch of debt, and finding a job to work to possibly eventually one day retire on Social Security. So awesome that you found a teacher who, would even have Rich Dad, Poor Dad available at the school. So right now, prices are skyrocketing. We've seen over 15% appreciation in most markets. The supply is not there to meet the demand. And I think we're kind of seeing a plateau where I don't see prices skyrocketing much more the rest of this year, but I don't see them going down yet. Knowing what you know now, if you were starting over, how would you do that? How would you get to where you are now?
Well, the strategy that I would most widely recommend for what I would consider your average viewer is that I would just continue at the moment to work the job that I have, assuming that that's how I make my living, my bread and butter. And I would begin to do two things. I would begin to save as much as possible. I know that's different for different people. And secondly, I would begin to educate myself immediately, as much as possible. There are so many ways of doing that. It really just requires that you take the initiative and make the effort to begin diving into that. I think that I would educate myself in two ways, really. One would be strategies, and another one would be my market. What does it look like where I am or where I'm going to be investing? And I realize most people start out where they're at, maybe not all, but those would be the two things that I would do. And then I would begin by looking for, once I felt like I had an idea, I knew a strategy that was going to work for me, and I knew enough about the market that I could buy something that would be a promising investment long term, cash flowing, even in the short term. And then I would invest that way. And I would start with that. And that gets your foot in the door. That gets you, it opens your eyes really to what the possibilities are. And then I would just continue to use that strategy over and over again as quickly as possible within whatever my means were and my market was. And I would start to build a portfolio that way. I think it's simple. I think it's doable by just about anybody who makes up their mind to do it. And that's what I would recommend to the average person who wants to start.
Investors that know how financial freedom works once you reach it, we know we would reproduce exactly what we did. Buy properties to buy and hold because that gets you your freedom. You didn't say you needed a secret. You said you would educate yourself on your market to find out what works there, because in some markets, single family houses cash flow. In mine, they don't. So I go with small multifamily. In other areas, it could be Airbnb. It might be the better way to go. Once you understand your market to figure out how you're going to invest, because I talk to a lot of people who say, I can't invest where I am because it's too high cost of living area. Well, they're not thinking of a few things. First, someone is investing there successfully. And second, if you're in a high cost of living area, house hacking becomes even more important, because if it's the biggest expense, the more of an impact you can have on it, the better for you. I pretty much agree with everything you said. If everything was taken away from me, I would keep my job. That makes lending an option. It makes saving an option. I would save up to buy a rental property, because you have to get your foot in the door, because the income snowball doesn't kick in if you don't have cash flow, appreciation, principal pay down. Most of that is happening automated to where you don't have to think about it. I'm glad you said it that way, because a lot of people that I talk to say, well, I would quit my job and jump into real estate, which shoots them in the foot. How do you start in real estate if you can't show consistent income? You don't have a good debt to income ratio. You don't have the client base to jump into real estate if your idea is to be an agent. So the people who want to be agents can slowly build their clientele as a side hustle while they're working their job until they jump into real estate. And I don't know that becoming an agent is even a good path, because I don't think you or I would do that. There's some statistic like 98% of real estate agents never own one rental property, which I don't think I'll ever understand, especially if they're working with people like you and me. The agents that I've worked with have rentals, and they're just as excited about my next deal as I am about theirs. So you would learn your market and invest with a long-term strategy. About how long do you think it would take you to reach financial freedom if you were starting from no properties?
If I had to start now, I would anticipate that I could do it in a maximum of 6 years. But that, I think, would be a maximum. I really think that it's possible that it could be done sooner than that if I chose to be aggressive. And by that, I don't mean, again, there's no secret. I just mean I stuck to the plan, stuck to the budget, met the people, educated myself, and looked, and didn't treat it as a hobby. If I treated it as a crucial part of my future, I think within 6 years, if I wasn't there, I would be awfully close, because that's where I would be. I think within that amount of time, I could find the deals, I could the cash flowing deals. And I believe I could start to replicate that multiple times, to where by 6 years, I wouldn't be buying just one property in a year. I think I could buy more than one, or multifamily.
Again, I pretty much 100% agree with you. It's the original name of this channel before I went to Dion Talk, Financial Freedom, and the financial freedom is in there because of how the YouTube algorithm works, so that people can find it. But my first initial goal for the name was 10 years to FI. But nobody's searching for that. So that ended up not being the name, because I think that the average person without strong drive, without strong discipline, can reach financial freedom in 10 years. For me, it took about 8, but I was starting from a position of a lot of bad debt, and I wasn't making a lot of money, and I didn't know what I was doing. I think 6 years for somebody who's taken the time to go to YouTube University and educate themselves and learn their market is probably the perfect timeline. To expect it faster than that, people, I think, would take larger risks, and larger risks don't always equal a better return. Sometimes it equals failure. But strategic risk over the right time period at about 6 years, if a person isn't financially free, they're on coast financial freedom, because the income generated by the assets you've acquired in those 6 years will continue to snowball to help you add those assets in the future without actually taking money from your job. And that's about the point where you've got rental income on your tax returns, you've got a good debt to income ratio, and work is optional to the point where you can continue to invest even without the W-2 income. The longer you keep the W-2 income, the easier it is to get those mortgages, but it's definitely not required. So you have 48 units, you have reached financial freedom. We know what you would do if you lost everything, but you haven't. So it was just a mental exercise. What are your goals while you have these 48 units? So I'm going to list out a couple. Continue to add units, because the more money you make passively, the more you're able to help people. Stay where you're at and focus on debt pay down so you can have a better retirement, or sell off all your properties and invest in a different asset class. Which one of those do you think is going to be the way you go?
I definitely do not intend to sell my properties at the moment. I intend to keep what I have. That may be a future strategy, but that's a whole different thought process to do that. So at the moment, I have kept everything I have, even though in this market, there is a large number of people who have tried to buy my portfolio and my assets. However, I have refused to take that approach at the moment, because I have achieved, number one, financial freedom, and number two, it's something that continues to not only appreciate, but also because it has turned into what some might call a cash cow. And so I am, at the moment, I'm treating this as something that I know works, that has set me free. And while I am at this point, because of where I'm at, I am looking into other strategies. I'm looking into possibly getting into commercial properties and things of that nature. But at the moment, I'm hanging on to everything that I have that works. That strategy, which I use to get to financial freedom, I'm keeping that. And I am continuing to add. And I am also, of course, like you said, I've been doing this for about a decade. I have reached financial freedom, and I have the option now to begin to educate myself in other strategies, which would allow me to use what I have, but also diversify. I wouldn't have done that 10 years ago. But now that I'm at that point, that's what I'm looking at doing.
Yeah, you make some really good points there. A lot of people talk about diversifying, but they look at it, in my opinion, incorrectly. You do not diversify into asset classes so that you can invest. Once you've invested into the one that makes sense to you and you've reached financial freedom, now you can diversify to protect your portfolio. Kind of like people who want to do wholesaling or flipping or the Burr method. I don't think starting with those is the best strategy. I think once you have a portfolio and you have the cash flow to handle mistakes, because they're going to happen, then you can branch out into those to try them out. And I'm with you on not selling. Most times when I talk to people and they talk about, I'm getting a really good cash on cash return, but I'm not getting a really good cash on equity return, because I could make more money. I could cash out, refinance, buy a better performing asset. I could sell, try to find a better performing asset. But here's something I think people should take a note of. Once you reach financial freedom, and work is literally optional for the rest of your life, you don't need more financial freedom. So the last thing you want to do is risk the freedom that you've reached. So that's why I'm not tapping equity, selling assets. And someday it might make sense to sell all of my properties and just buy Bitcoin and go live on a beach in some other country. But not today. And then you made another point of you're continuing to add. I continue to add mostly because it's too easy to stop. Yeah, it's way too easy to stop adding properties, and it just makes sense. So for me now, like you coming on here today, the goal is to get this information to as many other people as possible so that they can make work optional too. And I really want to say thanks for coming on here today to do this. If somebody wanted to reach out because they have some questions because you are killing it, how could they get a hold of you?
Sure. I can be reached probably most easily at my email. That would be p3investing@gmail.com. That would be the best way they could reach me.
Okay, great. I appreciate that. I'd like you to come back at some point in the future and share your next deal with me, if you would.
I'd love to do that.
Awesome. Okay. Thank you. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.
Cool. That last bit always feels weird because I have to stare at the camera for a second because when I edit in the sound, it chops off seconds. So
that's fine. I've seen your videos, so I knew what you were doing.
Okay, cool. No, that's perfect. Because that's really what I'm looking for. And it's not one of the, I don't want people to come on and go, well, I watched your videos, Dion, I would do what you do. Obviously, that wasn't the point. You've invested, you've reached freedom. How would you do it? Buy and hold investing over time. And you know that it's going to take years. You know, my biggest struggle is when someone reaches out and says, I want to be a millionaire. Like, what does that even mean? Buy the next cash flowing asset. So
yeah, there's a couple things, and I was a little bit not sure if I should interrupt or what, how to, you know how it is.
Oh, sure. I do.
Since I'm not even as used to this as you are, I've made a lot fewer videos. But I think when it comes to the real estate agents that don't even own their own rental properties, it's because it's not about the job that they have or the market they're in, it's the mentality. And if they don't have that mentality, then they see real estate as a job, not really as an investment.
Yeah, that makes sense. I suppose some people become real estate agents because they want the freedom of schedule. You'll be able to take the kids to events or to school or feel more independent so they don't really have a boss. But most of the agents that I work with that are working for a brokerage pretty much have a boss. Yeah.
Some of the people that I most like to talk to and work with are people who are both bankers and real estate investors, or realtors and real estate investors. There are not a lot of them, but they are some of my favorite people to have lunch with.
Yeah, mine too. I met a young lady recently. I'm going to try to talk her into doing a video, but she's buying in Washington and she's buying in Ohio, and she just sold a house in Washington to do a reverse 1031 for Ohio. So she's already got those properties. She's going to use this gain as a write-off for that. She's going to have to explain that to me. But she's an agent and she's an investor. So every conversation we have, it is like, it's one of the few times you get to talk to somebody in your life where you don't feel like you need an interpreter.
True.
So
I have a lot of people who don't understand the verbiage, or if they know anything, they're working with what they heard on HGTV.
Right. Yeah.
It's fine if you're looking for entertainment, but when you're trying to understand what's going on behind the scenes from the real estate side, not necessarily the television side, you have to understand what those terms mean and what those strategies, how they work, because I have run into people who know a lot of the terminology, and yet they don't have the mentality. And, you know, I don't know if you've ever read the book by Napoleon Hill, Think and Grow Rich.
Mm-hmm. Listen to it probably 10 times, but yeah.
I read it years ago, back before I was listening to anything. And not only that book, but of course the book I also mentioned, Rich Dad, Poor Dad. Most people who invest in real estate have at least heard of that book.
Right.
And once I understood that the mentality was the key, it really was. The opportunity is there. There's virtually no one who can't do real estate.
Or investing in what excites them. And I really think people should start with Rich Dad, Poor Dad because it sets the mentality. And you're 100% right. Mentality is success or failure. Strategies you can adjust and change on the way. But if you don't have the right mentality, none of the strategies are going to work. after Rich Dad Poor Dad. So Rich Dad Poor Dad and Cash Flow Quadrant. If you haven't read or listened to Cash Flow Quadrant, that's the next one of those two. But then you need to, not you, but people need to go, is it stocks? Is it crypto? Is it real estate? Is it buy and hold? Is it at a distance? Narrow down their criteria to how they're going to invest. But you have to start with that mentality. And I haven't found another book yet that kind of gets you the mentality like Rich Dad Poor Dad does, which doesn't have any step-by-step processes in it. It just gets your mind understanding asset, liability, make a plan, don't have to work. Like kindergarten simple.
Yes.
Cool.
Yeah, when I first read Rich Dad Poor Dad, I didn't have the mentality. And so I was looking for a step-by-step strategy. I didn't find it. So I went to Cash Flow Quadrant. I read all of that book. I still didn't find it. And I was partway through his third book, which I believe is What the Rich Invest in That Poor and the Middle Class Do Not. And that's when the light bulb moment came on for me. I realized he wasn't going to give me a step-by-step strategy. He was helping my mentality. From there, I read almost every book he's ever written, although I will admit that at this point, they're getting a little bit, it's just the same thing warmed up to a certain degree.
That's what most of us find as we're educating ourselves. You'll hear people say things like, I stopped listening to BiggerPockets because they say the same thing. Well, the same thing works. And we need to hear it enough times until it becomes a habit and it's a part of our way of thinking. And then once it's a part of our way of thinking, it feels redundant when we hear it. But we forget, I had to hear it 30 times from several different information sources before I decided, oh, this works.
Yes.
Yeah. And so for me, it was that way. It was Rich Dad, Poor Dad, Cash Flow Quadrant. I found it late. I wish I'd found it early, but when I found that One Rental at a Time book, I was like, he laid out every single thing I've ever done. If I'd found this 5 years earlier, I would have kind of had the step-by-step, just do this in this order and get there. Yeah,
that's a great book too. There's so many resources now, and some of them are free, some of them are expensive, some of them are fancy, some of them are simple. But for somebody who is determined and someone who's willing to work as hard or harder than they do at a 9-to-5 job, this is doable, especially within that 10-year period, even for a beginner. And I think that the tools are out there, the availability, even in this market, with its challenges, is still doable. And if people will educate themselves, like we said, on the mentality and the strategies, and put those things together, they can do it. They can do what we did. They can do what many others have done. They can reach financial freedom.
One of the things that a lot of people seem to confuse is financial freedom with passive income. Yes. And they'll say things like, oh, I don't want to be a landlord because you have to deal with tenants or a property manager or problems. And I think 2 hours a month to self-manage 16 units, I only have 16, is so much better than 50 to 60 hours a week to make someone else rich. That should be on a t-shirt.
Yes.